Hello and welcome back to Almus Market Mornings, folks, your daily dose of global financial update. And I'm Shikhar Garg, your host. And Monday indeed looked like the distant brother of Friday the 13th, as we were talking about yesterday. The stocks sank, bonds surged, and the major currencies weakened against the dollar. The expectations for a sharper rate hike by Fed increases the fight for inflation, which still rings the question whether these rate hikes are an apt tool for the inflation induced not majorly by the demand or wage increases, but a lot more significantly by geopolitics and the supply constraint. So, Pankaj, the whole financial markets are, in some form and fashion, discounting a larger or a sharper rate hikes and more rate hikes in the coming future. And we've seen the repercussions in the financial markets yesterday. What are your expectations? What are we seeing in the financial markets now?
Hey, thanks, Shikhar. Good morning, everyone. There's a kind of a saying we can derive from here. What central banks are trying to do, they cannot manage supply, they cannot bring down cost through a supply measures. So they are probably will kill the demand. And as it's been aptly indicated now by US 10-year, US 2-year yield, which is basically now inverted. 2-year yield is at 342 and 10-year yield is at 337. That increases the probability of recession in coming days. This is the headline, but now let's shift to the India. After record-breaking CPI numbers from US on Friday, Indian CPI number was much contained, much better means basically slightly better than the market expectation. Market expected something around 7.10, it came 7.01. And the previous CPI number was 7.79. Now, the core CPI, which RBI also look at, is year on year, it's 6.4% versus 7.2 last month. Even lower number than market expectation. It is above now RBI's comfort zone yet. And due to the base effect, market will be still worried on an inflation number. The better measure to look at how the inflation number is panning out is month-on-month increase. Now, month-on-month increase in headline number was 0.9% and core number was 0.5%, which is as of now out of comfort zone for RBI. India 10-year bond yield also jumped by 10 basis point after US CPI data and expectations of an Indian CPI number. 10-year bond yield closed at 760. And I expect today it's likely to deal in range of 755, 765. While market has given a greater weightage to US CPI numbers, investors are still worried. Investors are seeing that how the interest rate cycle will pan out. And if you see that the indication we can look at by this data point where US 2-year bond yield had jumped by 60 basis point in last 2 working days, and 2-year German bond yield had jumped up by 40 basis point in last 3 days. And this is giving a sense how the market has repriced the interest rate hike. Indian CPI drop is unlikely to help rupee, which is basically as of now, I can say it's in an RBI zone where they want to keep it. But yes, it was weak yesterday in line with other currencies, but still outperforming other currencies. We opened with a gap at 78.12, went as high as 78.28, but closed at 77.03. And I would thank our central bank to intervene. That's the indication that the central bank has intervened in a great manner. And that's all coming from, they probably intervened through a spot market and also through basically a forwards. There was also a rumor that there was a large inward flow of around $600 million for a PSU bank. I just want to hint on another thing is that RBI, when I'm saying it's intervening through its forward book, the number of long forwards are reducing. That will be indicated by forthcoming data. And RBI is also trying to maintain its reserves at $600 billion. Now, there's another data point. Due to this intervention through forward book, premiums are at a 3-year low. And what happening basically is, this gives a hint that the premium has shrunk and which is actually a theoretically, if you look at Indian CPI is at 7.1 and US CPI is 8.6%. The premium can sick a lot more. If we believe these CPI numbers are there, they're likely to stay. Look at the other interest rate parameter. 1 year Indian G-Sec yield is around 6.20, and similarly 1 year US yield would be around, I've not tracked that exact number 1 year, but 2 year I can tell you 2 year is at 342. So it will be 1 year would be around closer to 350, 355 types. So that's the interest rate differential as of now. Meanwhile, risk sentiments has worsened further in yesterday trading, and now S&P 500 joined the Nasdaq club of a falling more than 20%, and they are both in a bear category. Yesterday fall was also triggered by market expectations of 75 basis hike in the tomorrow meeting. Wednesday late night we will be an outcome, and now the terminal rate expectations, which were 2 weeks back, 3 weeks back, were around 3% in US, has gone to 4%. That's a massive shift happening. Strong CPI data followed by a very weak Michigan consumer sentiment data on Friday also confirmed the same. Technically, chart looks like there would be more losses on the equity side. We are in a globalized market and inflation is sparing no one. Hence, it is not surprising that every major index is taking a hit and bonds are also getting sold off. We have not spoken about cryptos for very long. Now, coming back to cryptos, Bitcoin, the leading crypto asset, I won't say cryptocurrency, but crypto asset has slumped by more than 20% in 1 day to $23,000. Today is dealing at 21,500. Gold, which moved higher by $40 on Friday after CPI close, after CPI data, lost $40 back on Monday and now dealing unchanged at $18 to $25 per ounce. Dollar is getting support all around, safe haven demand, unwinding of a carry trades, yield attraction, relatively greater challenges faced by other economies. If we look at the something which is going through in Japan, we are seeing some kind of intervention happening in Japan. 10-year Japanese bond yield has broken 0.25%. And at the same point of time, dollar yen, which moved higher than 135, moved back lower than 134. There is a vague talk that officials offers were above 135. Let's see how it pans out. Euro, which is also at a 20-year low. Both of them, both central bank, whether they can combine together and look for halting weakness in their currency, that market would be looking at. USD index had moved above previous high of 105, now dealing at 105.10. The other thing, just want to highlight the kind of spending happening on these sports league. The way rights of IPL screening and other IPL related rights are being sold off, IPL is going to be second highest revenue grosser sports league after NFL in USA. That's all from me. Thanks. That's it, Pankaj.
Okay, Pankaj, I mean, there was quite a lot of insights, and few things that I picked was Indian CPI, even though slightly better than expectation, the market is still weighing in all the options that we can see. The 210 yield for the US have started to convert, started converging, while the premiums, the differential between the premiums and the inflation, if the inflation stays high, we can see the premiums shrinking for the currencies. While on the other hand, on the global front, intervention in Japan by JCB or the Japanese central bank, the dollar index making new high, all things are pointing towards a lot of market movements. And I like the fact that we've touched upon crypto, because there was something very peculiar happening. Peculiar thing happened over the night in crypto markets. The crypto lender Celsius Network, one of the key players of decentralized financing, indicated that they are pausing all the withdrawals, swaps, transfers over the speculations that speculations on its ability to provide the outsized returns that they have offered initially. So these kind of activities constantly add fuel to the fire of the uncertainty in the financial markets that are going on, and also push the confidence a bit lower on the crypto side. So people, there are a lot of things happening in the financial market, and risk management continues to be one of the key sectors that we need to focus on. I hope you guys are doing it. Till then, take goodbye and catch up again tomorrow morning. Thank you.